Have you ever seen a situation where there's a huge political storm brewing, but the stock market is just kind of sunbathing? Well, that's exactly what's happening right now between Washington and Wall Street. And today, we're going to figure out why.
All right, so here's our game plan. First, we're going to break down the political standoff. Then, we'll look at the market's really weird, calm reaction. After that, we'll see what the experts think is going on, check out their investment playbook, and of course, figure out the big takeaway from all this. Okay, so let's get right into it. The headline that's just dominating everything right now. We're talking about Washington, D.C., where the U.S. government is staring right down the barrel of a potential shutdown.
Yeah, Bloomberg is calling this a shutdown showdown. And, for good reason. We've got President Trump and top Democratic leaders heading into what is basically a last-ditch meeting today to try and break a stalemate over the budget.
And this timeline, wow, it really shows you just how tight this whole thing is. You've got that critical meeting happening today, then boom, tomorrow at midnight, the funding runs out. And by Wednesday, we could start seeing federal activities actually shut down. I mean, the clock is absolutely ticking.
So, with all that political chaos swirling around, you'd expect the markets to be freaking out, right? But that's not what's happening. Not at all. In fact, what we're seeing is this really curious case of market optimism.
And that really brings us to the core question here. Why? Why is there this huge disconnect between the mess that's unfolding in Washington and this calm, almost bullish reaction we're seeing on Wall Street?
Okay, and here's where it gets wild. On the one hand, you've got this very real threat of a shutdown that could disrupt the economy, maybe even mess with key data like the jobs report. But on the other hand, S&P 500 futures are pointing up. It's like every time the market dips even a little bit, investors are just jumping in, seeing it as a green light to buy.
I mean, look at this. This number is a perfect example of that disconnect. We're talking about the NASDAQ 100, which is up almost 5% this month. Think about that. With all this political drama, you'd think investors would be running for the hills. Instead, they're shrugging it off. That's not fear, folks. That's pure confidence.
And the mixed signals just keep coming. Look, the uncertainty is showing up somewhere. Gold, the classic thing people buy when they're nervous, it's surged to a new record high. But, and this is the crazy part, even as investors are buying up gold to be safe, they aren't selling their stocks to pay for it. It's a super unusual dynamic.
All right, so how do we make sense of this? To figure it out, we've got to turn to the experts. So what are the big shots on Wall Street actually saying about all this?
Well, this quote from Simon Dangora over at Goldman Sachs, it really just nails the whole sentiment right now. He says the U.S. economy is bending, not breaking. And that one phrase, that is the core belief, the foundation for all of this optimism we're seeing.
So what's propping up this confidence? Well, Dangora and Carlos Slater from State Street are pointing to a few key things. First off, the economy itself is just strong. GDP growth is looking solid. Second, you've got the Fed acting as a safety net. They're in what's called risk management mode, which is basically code for we're ready to cut rates if we need to. Third, if you look back at history, these shutdowns, they tend to be a blip on the radar for the markets, not a long-term disaster. And finally, you have the investor mindset itself. People are just trained now to see this kind of political noise as a short-term buying opportunity. Buy the dip.
Okay, but the experts are watching one big thing for the long term. It's a term called fiscal consolidation. Now that sounds complicated, but it's really just about the government getting its debt under control. And this is a big deal, because until there's a clear plan for that, Goldman Sachs is saying it could keep long-term borrowing costs high. So think of it as the serious economic story playing out behind all the short-term political drama.
All right, so if the big firms think the economy is tough enough to handle this, what does that mean for your money? What are they actually telling their clients to do right now? And here we get a look right inside their playbook. You can see Goldman Sachs just upgraded stocks to overweight, which is Wall Street speak for buy more stocks. At the same time, they're a little more cautious on bonds. Then you've got State Street, who's seeing solid signs of risk-seeking. Basically, investors are feeling brave. And they're telling their clients to keep buying on any dips. So the message from both is really loud and clear. Stay in the stock market.
Okay, so we've looked at the politics, the market reaction, the expert opinions. What's the big takeaway when you put it all together?
Really, the story of the day is simple. Investors are looking right past all the political theater. They're making a bet. And that bet is that a strong economy and a supportive Fed are way more important than whatever drama is playing out in Washington.
And that leaves us with one final, really important question to chew on.
Right now, the market's confidence seems backed up by the data. But with everyone betting on resilience, you have to ask, are investors being smart or are they just getting complacent? Is the biggest risk of all just ignoring these warning signs until it's too late? Something to think about.